All right, here we go. What an exciting day. So, this morning, the jobs report has been released, and there's quite a reaction to it in the market. So, we'll take a look at this. Then, also yesterday, after the bell, Apple reported earnings, and I do have an Apple position, so we need to see what's happening there. And, well, we'll also need to check all of our other positions that's going on. With that said, welcome to Coffee with Markus and Mark. And today is Friday, May 3rd. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. Mark, geez, where do we start? So, on Wednesday, we had the Fed meeting, right? And this is where we heard that Powell is really a little bit concerned about the jobs market. This morning, the jobs report was released. And here is what we saw this morning. Let's maybe start with that and then take a look at the reaction.
Yeah, this is a great report for the Fed. Not so much for the economy, but not so bad for the economy either. We have 175,000 jobs added, which is fewer than the 238 that was expected. There was also a revision to February and March that decreased those jobs added by 22. So the theme is that we're not adding as many jobs as expected. Average hourly earnings came down a tick, and the unemployment rate went up a tick.
Yeah, I mean, that is kind of the big one because we talked about, I mean, Powell on Wednesday said, okay, yes, inflation is sticky, but the economy is doing well. And he said, well, we're watching the labor market, but unless the labor market shows signs of crackling, we're not willing to lower interest rates. Well, it seems that these numbers, traders are taking it as a sign of crackling because if we look at a 5-minute chart of the E-mini S&P this morning to see what happened here, right when the jobs report was released, look at this. I mean, this move, it looks harmless, but all the way up here, that's more than 1% in the S&P, 1.2%. That's a substantial move.
Yeah, and you could tell the traders were waiting for this one because we were just flat overnight and then that big reaction. So this is a positive, but also yields falling at the same time, which would be expected. But I mean, this is where bad news for jobs is good news for cuts. And there you see it in the yield market.
Yeah. So if you're looking at a 2-year yield, we see that it has been retracing from the highs. The same here with the 10-year yield, now decisively below 4.6 again after scratching 4.7% last week. But right now, also, kind of the enthusiasm is fizzling a little bit out. But we need to take a look at this, Mark. Look at this. Let me scroll up the probabilities. And oh my gosh, take a look at this. This is until the end of the year. And just like this, we're back to 2 possible rate cuts. Even though for the last few weeks we had 1 possible rate cuts that traders factored in, we haven't heard anything yet from the Fed. But right now, traders are factoring in, all right, there will be a rate cut in September. And now the probabilities for a July rate cut have jumped up.
Yeah, and this is where just yesterday it was about a 50-50 chance that we'll get a second cut. But now they're creeping up significantly. So traders betting on 2 rate cuts, what a difference a day makes, because that was definitely not the case after the Fed statement.
Yeah, just like that. But also, if you look at the S&P 500 on a 5-minute chart, we see that the enthusiasm right now is a little bit fizzling because, I mean, is this what we are seeing here in the jobs market really enough for the Fed to say, yeah, the job market is crackling? After we have seen that the jobs market remains strong, and this is where again, one of these birds doesn't make a summer, or what do we say to this?
I'll go with that.
Yeah. Anyhow, yeah, so the VIX, the volatility index, down this morning as the markets are moving higher. Yields, we talked about this. Bitcoin now jumping above 60,000 again. And then also crude oil moving lower, which again is good for inflation. So it should lead to lower inflation. So overall, everything looks good for the markets.
I'd say so. So far, good day.
Yeah. So there's one day one thing that I saw this morning, and it is all about corn futures. It's where are we? Corn futures. Let's take a look at this. I thought it was C. Oh no, it's ZZ. ZC is corn futures. They are actually making a high for the year. Look at this. And again, this is where we need to look a little bit of, okay, will this affect inflation? Well, commodity prices in general, it would be good if they are not jumping higher. We had this with copper recently, but it has calmed down. Gold also. But that's interesting, making the highs of the year.
Yeah, just kind of creeping up and taking off for sure.
Yeah. All right. Anyhow, let's talk about earnings, and Apple reported earnings, and holy cannoli. I mean, an overnight trading up as much as 7%. Right now, still up 6.6%. I mean, with good news all across the board, even though the good news are not necessarily coming from the earnings.
Yeah, I mean, this is where there was a small earnings beat, also a revenue beat as well. So that was positive for Apple. But I think the real big impact on the stock was the announcement that they would buy $110 billion worth of stock back. So a stock repurchase plan, which is always going to help the stock price.
This is the largest ever for a private company. So let's talk about, how does a stock buyback help the stock price?
So if you have 1,000 shares of a company that are outstanding, and then all of a sudden that company decides to buy 300 back, you're left with 700. Now, if there's only 700 now, then there is going to be less supply, right? Well, figuratively speaking. And if there's the same demand, then that just means that those 700 shares are going to increase in value.
Yeah. And this is why Apple just skyrocketing. So, largest buyback ever. I mean, not only for Apple, but for any private company.
Yeah.
All right.
It was almost like, hey, we're sitting on some cash. We don't want to buy anything, and we know that traders aren't going to really like this earnings season or quarter. So let's create some fireworks.
For sure. For sure. I mean, fireworks it is. I mean, that is a huge move for Apple. Now, with that said, shall we go straight into our positions, or are there any other stocks that you wanted to discuss this morning?
Let's just talk about our
Let's
positions.
talk about our positions because, yes, Apple. And, well, I don't know. Do you want do you want to call me a genius, or do you want me to call myself a genius? Okay, no, long story short. Okay. So I own shares from 167.50. I sold the 172.50 calls. So again, genius, I don't know. I think, did you send me a message this morning, or was it yesterday? Like, should have sold the 182.
That was this morning, and so had you sold the 180, well, I said 185. Had you sold 185 calls, you would have definitely been a genius. But now you're just a borderline genius because it was the 172.50.
Nah, I mean, I'm just following my plan. And I mean, if you have been following along, you know exactly what my plan was. So I'll make $5 per share plus the premium that I collected here. I mean, at this point, these options expire today. So I'm pretty sure that I'll get called away unless Apple suddenly drops below 172.50, which is probably not going to happen. And yeah, we talked about it yesterday. I mean, Mark, you basically said, oh, yeah, Apple will go higher because you were hoping for it to go lower, that we can sell some more puts again.
Yeah, I mean that was the plan. I think without that stock buyback, that definitely would have been in the realm of possibility. This is a huge move on earnings for Apple. If you look at the last 12 quarters, the average win. So if there is a positive reaction, the average win is typically about 3%. Uh, and even on the seventh day, it's maybe 3.25. So if the stock was trading at 170, that would be a move up to 175 on average, right? And not the exact numbers, but if it was trading at 172, maybe you're at to 178
Yeah,
on average. This is a big move for Apple.
it is a huge move. And yes, I'm happy to make a lot of money on Apple, and kind of sad because Apple just moved away from put selling territory.
Yep.
In this
Yep.
where we like to sell puts at support. So we did sell puts at 170. We did sell puts at 167.50. I mean, right now, if you wanted to sell puts, it would be for the 182.50. For me, this is way too high.
Yeah. But you never know. Maybe we'll get a bit of a gap fill over the next couple of weeks and an opportunity to do 170s again.
Yeah, we shall see. All right. CSIQ also jumping higher this morning on hopes of lower interest rates, pulling back a little bit. Same with the market right now. But hey, we jumped above 17 this morning. I'll take this.
Yeah. I mean, this has been a nice move off of that 1450-ish low that was established. It got a little bit below there, but it does look like there's some support and like the move higher.
Yeah. All right, nothing to do there. And then there is NEE. We called it. We said it on Monday.
Yeah.
We said on Monday, this is the week where we are selling some calls on NEE. And we tried yesterday, but this morning with this move, it worked. So we did sell calls against our NEE position. For me, I have 2,900 shares. I sold the 70 strike price, or we both sold it for 70 cents, 45% annualized. So this means that I'm making around a whole lot of money here.
Yeah, not too shabby. And I mean, this is where we've always talked about NEE being an income play and being held back by higher yields. But then we've seen a real nice rally off of lows back from March. But I mean, this thing, it's up, and away, and a big down day for yields helped us make highs for the year. Getting some call premium is always nice after a little bit of a break here.
Yeah. So $2,000 for me. Plus, if we close above 70 by next Friday, I'll make an additional $1,450 from the increase in stock for a total of 3,840. But it's not over yet.
It's not over yet, and we have had some premium collected already, and some dividends there, and dividend most likely coming up. What's that? Probably in a month after earnings. At
Yep.
least that's what they've done in the past. So we'll
Yep.
see if we're still in it then.
Yeah. And you see, this is the money that I received this morning. So this is where I sold this. That could happen or not, right? So this is why we never count the unrealized profits or losses or anything like this, because this is all woulda, coulda, shoulda if it stays above. This, however, we have collected. Now, we might decide to buy back these calls and then we give back some money. So this is where we like to buy it back at 90% of max profit. So this would reduce this by around $200. So then we keep 1,827. But this worked out pretty well, and yes, we'll see what happens here over the next few weeks if we can get called away and be done with NEE.
That's the plan.
UPS this morning also opening higher right now, just around unchanged mark. I'm a little bit surprised by that UPS is not reacting more positively, but look at my little trend line here. It's still working out.
Beautiful.
So this trend line is just beautiful, gorgeous. This is where, not yet in call selling territory. All right.
But I think that squiggly arrow that you just drew is going to do the trick. That's
That is
what
going to
you
do the trick. Yeah.
Yeah.
Now we should talk about Skyworks, SWKS, because that is a trade that you entered yesterday. Since I still was in the Apple position, I decided to wait it out. But hey, this is where I can call you a genius right now because you probably already closed it? Let's talk about this.
So this one, and Marcus, if you go a little further back, this was an earnings play where there was a negative reaction to earnings and even some follow through yesterday. I sold the 87 put. So I like that longer term support there around 87. Gave me a little more to the downside. Company looks solid in spite of that earnings drop. Got 70 cents on those puts yesterday, and about 30 seconds ago, I was filled with an 80% exit order. So my plan, and Marcus, your plan as well, is to buy back those puts 90% max profit up until 1 day before expiration. But if we could get 80% in 1 day, why not? Right?
Why not?
So why let that go all week long when most of the profit's already been accumulated? Now I'm out, and if I want to, and there's another opportunity, I could take a shot at it next week again.
Right. And just to be clear, these options that you sold yesterday would have expired next Friday. If they would have expired
Correct.
today, you would not have bought back. This is not according to our
Exactly.
plan.
Yep.
Anyhow, so we'll jump over to WTF positions, but Apple, so this is nice dollar sign for me. NEE,
Yeah.
dollar signs for both of us, and then SWKS, dollar sign for you. So,
Although you did a little better with Apple, I have to give you a pat on the back there.
so I'm getting $3 signs.
Yep.
Well, this would give us a total of 6, which is great because it's
That
more
works.
than it was previously. Okay, anyhow. Okay, let's hop over to the WTF analyzer. And we do have some action there. So a couple of days ago, we entered COP, ConocoPhillips. Right now, down you see our entry price right here at 125.08, current price 121.18. Still far away from our stop loss, but with crude oil pulling back, also the whole energy sector is pulling back a little bit. So right now, nothing for us to do. If you like this, right now there's a possibility to buy it at a lower price, but nothing to do here. Then we also had IBM. And IBM this morning, trading a little bit higher, getting close to our entry price. So if we see this here, our entry price 167.50, right now trading at 165.82. Nothing to do. This is still an open position, waiting for an exit signal here. TGT, Target. Let's talk about Target. I mean, Target did well this morning, moving higher at first, but now pulling back a little bit. So you see our entry price 160.83, our current price 158.17. Nothing to do here. All of these are right now below their entry. So if you want, there's another possibility for you to jump in.
Yeah.
EMR. That's our entry signal from yesterday.
Yep. Just hanging out.
Just hanging out.
Little bit
Entering
of
at
a pullback.
1720. Right now trading at 106.32. Nothing happening here. And we have a new signal. Dash.
Yes.
DoorDash. That is an interesting signal because yesterday they got hammered after announcing earnings that got worse than expected. And therefore it popped up on the WTF scanner. So entry price at 116.48, current price at 114.32. So we'll see. I mean, right now you see our stop loss is very far away, so we do have plenty of room here. It does look good. Let's see what happens with all of these positions. So right now we're in 5 positions according to WTF.
Yeah. And looking for the stocks to rally a little bit and get out for a nice win.
Yeah. All right. Let's see what's happening in the overall market. But before we do this, it's time for a dad joke. You got one for us? You're winning. You're crushing it with your trader dad jokes. I'm trying here. I'm trying.
And you know what? Just to throw a little salt in the wound, what do you call a class about unexpected market drops?
I don't know.
A crash course. Had to do another trader joke. Seemed to be.
Yeah. Now, since we had Apple earnings, I have one for Apple. So it's kind of a trader joke. You want it? Want to hear it?
Okay. Yep.
You see, the oldest computer was actually owned by Adam and Eve. It was an Apple with very limited memory. Just one byte and everything crashed.
Okay. I think you're gonna win today. Yeah, that worked.
All right. Ladies and gentlemen, from the jury, please vote in your comments. Let us know who won today. And with that said, let's see what is happening here in the markets. If the markets can actually hold up these gains, and we see that after initially pushing higher and then pulling back a little bit, now we are just stabilizing right around 5,100. And this is super interesting if we zoom in a little bit. And we take a look at the 50-day moving average. We see that this morning we briefly peaked above the 50-day moving average, but right now below again. So, Mark, what do you think? Will we close above the 50-day moving average again? And for reference, it is at 5,130. That would be the line in the sand.
When you say again, you're saying today?
Today. Yeah, sorry, today.
No.
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 I'm with you. I'm with you. I don't think that this was enough. I believe that we will finish positive, but we are still stuck in this range between 5,000 and 5,130, which is the 50-day moving average. Now, looking ahead to next week, next week earnings season is winding down, but on the economic calendar, this were also not too much going on. The only thing, no, nothing. We just have a bunch of Fed members speaking since they are now out of their quiet period, and it seems that everybody will have to say something. So we have Barkin speaking, we have Williams speaking, we have Cook speaking, we have, I thought there was somebody else. Well, they might pop up next week. But other than this, we'll see. I think next week the markets will drift higher, and I think next will be the week where we close above the 50-day moving average again.
I think so.
All right.
I like that.
Now, I know that we went a little bit longer, but there was so much to unpack today. We hope that you enjoyed it. If you did, do give us a like. We really appreciate all of your likes. If you feel that this was great information worth sharing, there's a share button right underneath where you can share it on social media, by email, by text, by whatever you want to do. And if this was your first time here, well, consider subscribing. I think we have some good stuff here. Come for the market commentary, stay for the dad jokes, or leave for the dad jokes, whatever it might be. Anyhow, with that said, have a great weekend, and we'll see you again on Monday.
Happy trading, everybody.